All right, guys, looking at some pretty spicy price action, especially in precious metals over the past couple of hours. I think yesterday and today has been a very good lesson that when moves go parabolic, these types of melt-ups and rug pulls, it becomes a feature and not a bug. But we'll get to that in a second. Looking over markets, a lot of interesting moves and interesting takes out there as well. In terms of overall risk sentiment, things are pretty bleak right now, and the risk of across major asset classes is pretty clear. We've seen equities pushing lower, high beta currencies pushing lower, safe havens are higher, apart from bonds, which we'll get to in a second. And obviously we've seen just a massive rug pull in precious metal markets as well. Now, apparently, and I say apparently because I don't agree with some of the rationale around this thinking, apparently a lot of the price action that we're seeing right now on this very fine Friday is being linked to news that Kevin Warsh is being floated as the favorite to replace Fed Chair Powell. Now, the reason why I can understand this creates a little bit of uncertainty is that Warsh was usually more hawkish in his stance while he was at the Fed back in, when was it, 2006 to 2012, I believe. When he was there, he was a more hawkish member, right? He preferred tighter policy, showed more skepticism about QE, but recently he's taken on a new phase, right? Advocating for lower rates, just like President Trump wants. So right now, the markets aren't really sure who are we going to get. Will the real Kevin Warsh please stand up, basically? Will we be getting the old hawkish one that we were used to? Or will we be getting this more recent, politically motivated and aligned dovish one that we've heard from? Now, since he has been, very keen on criticizing the Fed for handling the post-COVID inflation surge, there's also some uncertainty whether he would even be able, as chair, to win support for whichever cause he wants to pursue. So there is a lot of uncertainty there. And even though I can understand that creating some uncertainty in the markets, I don't agree that the recent price action we're seeing is all because of Kevin Warsh. I think there's other reasons that can explain what we're seeing. Think about it this way, right? The markets wants us, or at least financial media wants us to believe that the downside we're seeing in equities, the downside we're seeing in precious metals, the upside we're seeing in yields or downside in bonds is all because the markets are now no longer sure whether they are going to get the cuts that they have already priced in, right? There's now this hawkish fear, some analysts are calling it, in the markets. Are we going to get those cuts? Now, whenever I hear that, whenever I see the markets react like this, and I hear that the reason is because we are doubting something, whether that is cuts or whether it's hikes, if it's rates related, the very first place that you need to turn to is interest rate expectations, right? Has the interest rate expectations actually changed? Now, last week, the markets were pricing in about 48 basis points worth of easing by the end of the year for the Fed. Today, after all of this, we're still pricing in 48, right? So, okay, if it's really all because of him and we are now super uncertain and confused about whether we are going to get cuts or not, surely you would have seen that reflected in the rates markets. You would have seen that reflected in money markets. Right now, money markets do not care at all, right? We're just not seeing that happening. So if you take a look at rate expectations, which is basically still sitting at 48 basis points, I just don't see the case that this is all because of the Kevin news. I just don't buy into that. If all of these markets are reacting to concerns about fewer rate cuts, but money markets are unchanged, I mean, call me crazy, but maybe that tells us something. Similarly, if you look at the amount of downside in gold and equities, if you compare this move and this move with FX and what we've seen in the US dollar, again, the story doesn't really add up, right? You would assume that, okay, wow, we are now concerned about a more hawkish Fed. Let's sell equities, let's sell gold, and let's do nothing on the US dollar. I mean, the dollar saw a little bit of a marginal push to the upside. But this move does not corroborate, what they would have us believe about what we're seeing in equities as well as gold. So I'm not really buying into it. Now, are there things that could explain this price action we're seeing a little bit better? Let's start with equities individually. I do think there is. I mean, earnings sensitivity in this market is real this week, right? We mentioned this before. When it comes to earnings in this particular year, One of the important themes for markets will be whether companies can convince investors that the huge amount of money invested into AI, whether it's actually paying off or not. And this week with Microsoft, markets are basically saying, listen here, buddy, if you're going to be spending all of this money and investing all of this money, you'll have to start showing us that it's worth it, right? Where is the payoff for all of this money that you've been burning? And Microsoft, I mean, we ended the session 10% down. Surely that explains some of why equities are trading softer, apart from just the Kevin news. And then, of course, there's the crazy amount of volatility in precious metals, which in my opinion reverberated into risk with the eye-watering moves we saw last night, right? I think a lot of the volatility had a spillover effect into risk, which also pressured equities, regardless of the Kevin news. So about these precious metal moves, I've had a lot of questions about this. I'm surprised everybody is surprised. Yes, we never know when we'll get a move like we saw today and yesterday. We never know when that's going to happen. But we all know that eventually things that go parabolic, just look at this move. Let's go to the weekly. We all know that things that do this cannot continue to do that forever. Right? At some stage, the move has to mean revert. We've spoken about this so many times in the last few weeks, highlighting the risk of violent moves, the higher and the higher that the market goes. You know, that's how these momentum markets, that's how these things play out. Firstly, you know, take a look at what happened to gold yesterday. We had that big break, that rush to that disorderly move, if you will, to the upside, and then almost getting to that 5,600 level. And then we had just a massive rug pull to the downside. Now, yes, there was a huge amount of selling taking place, and right now, the best guess is that it was profit taking. It didn't just hit gold. Everything was down. Gold down, silver down, copper down, platinum down. It was a move across the board. And right now, it wouldn't be, you know, out of the question to just look at this and say, yeah, you know what, maybe people are just rightly taking some profit off the table. Now, having said that, and this is something very, very important to always keep in mind, volatility works both ways, both to the up as well as to the downside. So, for example, let's go to this chart that we've been looking at so many times over the course of the last few weeks. So let's just take a look at the gold one. Look at gold's implied volatility, currently trading at 37%, and look at how aggressive this thing has run up just from a few days ago, right? Back on the 16th, we were still sitting at 19. Now we are at 37% implied volatility. Now, we've been talking about the rising volatility for a few weeks. This week, and especially yesterday, it went into overdrive. Remember, when volatility gets to these crazy levels and momentum takes over as the driving force behind those moves, there is heightened risk for wild fluctuations, both higher, like we saw earlier yesterday, and then lower, like we saw earlier today. So when volatility gets this crazy, these types of, you know, first melt up price action behavior and then rug pull price action behavior, these things are not a bug in the system. It's a feature of the system when volatility gets this crazy, right? Violent moves shouldn't be a surprise when things gets into this type of frenzy. When there is ample liquidity and the moves are orderly, the momentum continues, as we've seen over the past few weeks. But when liquidity dries up like it did earlier today, maybe due to things like less counter participation, with people just giving up on looking for downside, things can get real ugly real quick. You basically hit air pockets to the downside. I'm sure most of you saw that there are quite a few retail houses that halted all trading on metals. So, I mean, things got really, really crazy, really, really quick. And when that happens, when you have this disorderly type of reaction, you have to be very careful. I've got no appetite for trading this animal right now, but if I had to choose, I would be very cautious on the long side. When the liquidity dries up and you see this type of rug pull behavior, you need to be very, very careful. That's not me saying, I'm not giving you advice on what to do in any way, shape or form. Do what you think is right. But, you know, if I had to choose, I would be very cautious on the long side. Now, turning to the FX side, we spoke about the dollar briefly already, where we saw some marginal upside, but not really in lockstep with the size of the moves we've seen in the likes of precious metals or equities. The bigger mover so far has been the Aussie dollar. No surprise there. We know it's a risk-sensitive commodity-linked currency, so no surprise that when commodities are pushing lower, equities are pushing lower, that you'll also see the Aussie dollar pushing lower as well. Again, key one to watch going into next week's RBA, which we'll touch on in a second. The other one that we also saw having a pretty bad day was crypto. I mean, crypto just cannot catch a break, right? Currently trading at 82,400. It's been a bit of a weird one, right? Because normally fairly closely correlated to equities, but after topping out a couple of months ago, back in October, even though equities have rallied and risk sentiment have improved, crypto just cannot catch a break, right? It's down when it's risk on and equities are doing well, and it's down even more when it's risk off and equities are doing bad. So very, very ugly moves here. I would not be surprised if a couple of people are just, testing the water in terms of long term positions here. Look at 82. It can obviously always go lower, but if this is something that you are a long-term holder of, then it is a pretty steep discount here already. Again, I'm not telling you what to do here. I'm just telling you that where it is now, it can obviously go lower, especially if we do start to see some real bad risk-off sentiment taking hold. But it does look like some fairly steep discounts being presented here in terms of the crypto space. Now, in terms of the day ahead, we've got a couple of data points coming up. We've got some inflation data due for Germany, as well as PPI data due for the US. I'm not expecting any of these to be market moving, to be honest. Not something that I would expect markets to care much about at this stage. The main focus will remain on overall risk sentiment, so watching equities is important. Precious metals will be key. Also keeping a close eye still on oil with the geopolitical situation going on, and also keeping still a close eye on dollar yen with this recent move back up towards that 154 level. I'm still keeping intervention on the radar as a possible risk here for the pair. Now, next week, things get very, very interesting, guys. We've got a lot of exciting stuff happening. We've got the RBA, which I think is going to be a big one. We've got US jobs data coming up, the Bank of England coming up, a fresh batch of ISMs. So there's lots to talk about in next week for the week ahead. That reminds me, I will be hosting a webinar for that on Monday. So make sure to register for that, as I'll be doing a Q&A session afterwards as well. So with that said, hope everybody will have a fantastic day ahead. And as always, any questions, don't hesitate to let me know.